Well, good day, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening of Wednesday, the 13th of November 2024. A mixed bag in the stock market. You had three of the indices down, three of them up, if you will. It's interesting what happened there. You're still adding some yield into the BND. Amazon had a great day, up another $5, and Netflix, well, you know, I'm hearing talk, should Netflix take over Disney or parts of Disney? Unbelievable what you're hearing on that. You saw that Tesla went back up $1 today, not doing an awful lot, but gold and silver and copper all down. Now, these markets haven't lost their reason, especially gold. Let's stick with that, to retain a bullish posture. I see nothing to stop Trump from being, what? Inflationary. I don't hear anybody talking of cuts. Yes, I know we've got that department that they're creating with Musk and the new Ramaswamy, and they'll find ideas, but they don't have any real power, and they're not experts in the departments they're in. They're certainly experts in their own business, major league experts. But can you apply that elsewhere? I don't know. We're about to find out. We're about to see what happens. Did you see the appointments that went on today for Attorney General? I'm waiting to absolutely see on X that Mario Rubio is the choice for our Secretary of State. Did you see the Department of Defense? I mean, people in the Pentagon, I think you're going to see mass, and I mean what I'm saying, mass amount of resignations of career people in the Pentagon just saying, we've had enough, we're coming out. And I would assume that that is the goal of why they put into these positions who they have. We'll see. I was laughing when I saw the Attorney General appointment because Mr. Gates, I think is the way you pronounce it, he's up on sex charges as well in the House of Representatives. I mean, I'm not making this up. It's what it is. The Department of Justice did drop the charges against him, but you know, what can I say? I mean, you could write books about this and people would think it's a great fiction story. It isn't. You know, you laugh at it all. All right. When you look at Tesla, when I look at it at least, I see a market that left, if you will, gaps. And then you can call this an island down here. First gap, second gap, third gap, they're filling. So the exhaustion gap looks to me like it's been filled to a little bit of a degree. When I look at the chart on swing line, I have higher lows, higher highs. That is certainly bullish. When I look at the market over the 18, the 100, the 200-day moving average, well, you can see that you're still very much in a bullish scenario. Now, you generally don't stay, especially in futures, more than 5 days in a row over a Bollinger Band. I've noticed in trading stocks over the many years and SPDR's ETFs, you can go to 7, that number extends, but anything over 4, you're at borrowed time. You generally move back. Now, let me explain about moving back. Moving back doesn't mean you have to crash. Not at all. It's just that you're not as overbought as you were. You've done your job. You've broken out of the sideways action. To get back down here, something very seriously bad has to happen in Tesla. I'm not seeing that. So I think a major bottom has been seen. And new analysts that are coming out and covering it all week long, they're now raising targets. I'm seeing 400 is the probable number. Are you going to embed or lose the embedded reading? Well, you're embedded already. If this market tomorrow closes under 79, then the odds are in store for price and the 18-day average to meet each other. Now, that 18-day average of closes in red is moving at the tune right now of about $6 a day. So by the time that happens, you could be up into the 280 area with prices coming in there if it occurs. I'm not saying it has to occur. I'm saying the probabilities would be very strong that it would. When I look at Live Nation, you got up and over the Bollinger Band, and this chart doesn't like to stay over that number. You can see that. It generally gets thrown back. It's overbought. I can make arguments for a bit lower in pricing here. In CrowdStrike, this was the opportunity and where the market came in and held. And now the market off of Trump exploded to the upside. You may not think it's Trump, but that was the election week, and that's what the market exploded with. I'd wait for pullbacks, otherwise I don't want to play. Uranium, which way? It's neutral as can be. You're fighting a battle at the 18-day average of closes to get over it. You have a lower low, higher high pattern. I don't know what to do with it. It's just sort of sideways. In China, until the Chinese decide to really put something at work that gets market analysts around the world saying, they're addressing the problem, this market's leaking. And it's like, watching in a bathtub, the water just create that whirlpool going down, and it's carrying a lot with it at this point in time. Copper market, no demand for the gold, no demand for the silver, everything down because that big engine, and it's a huge engine that they have, it's slowing down. Toll Brothers, as I said, I like, if you're buying things, why not buy the best of the companies? I think this is the best of the home builders. I like when you're dealing with high-end product and you don't have to worry about mortgages. There's fewer sales, admittedly, at that price point, but you have your clients always going, there's always somebody new rich. Oh, I want one of those. You've got a lower low, higher high. I thought 2 days ago that you'd have a problem at the upper Bollinger Band as you're overbought. And now you look back at that and the market has fallen back $7, $8 a share. Home builders, I'm not in love with here. You haven't given me any reason to say interest rates are falling. None. And for the average home builder, that's a big problem, and that's what we're seeing. Now, we did see today in the mortgage index number, it went up 0.5 point. Not a point, 0.5 point. That's like dead. There's always somebody that has to buy. You know that. The refi fell 1.5 points, so we'll see what happens. In the financial sector, the XLF, this is one of those trades that I did get fortunate enough to have my clients in. It certainly helps on my bad trade in gold. I'm the first guy to tell you, I went back in, not in a full position, thank God, but I peeled out and then I went back in and now I'm riding a problem. And that happens. There's no trader that doesn't go through that. Higher highs, higher lows, time to cut positions down, and that's what we've been doing there. XLI, overbought into the band. I'll let somebody else want to own that situation. And an XLE, I love XLE, but not at these prices. The market's got an outside day to the upside. If you take out today's low on Thursday or Friday, it'd be a sign the market wants to then begin the correction, possibly back to all these three moving averages. So I wait my turn. If there's always something to do and something not to do. Here's something not to do. Follow me in gold on this trade. Definitely my traders loved me through here, but I thought back here it would hold and it just came down. Now, I believe that you can hold gold long-term in your portfolio, number one. Number two, did anything really change? I think the inflation problems are there and they're not going away. I think as Trump takes office, I know you think probably, well, things are going to settle down, everybody will just kowtow to him. What if they don't? With his personality, we could be in troubles a lot quicker than we were under Biden. I don't think that those are the elements I don't want to own gold on. I still believe it. So yes, gold has dropped $200 an ounce, lickety split, 2,800 back to the 2,600 level. Do I think it just is going to keep going down and down and down? Absolutely not, for the reasons I've given you. Now, if you were to break inflation, if interest rates kept going up as you're breaking inflation, if the dollar just keeps roaring, well, those are all reasons to not own gold, but they won't all come together that way for a long time. I am the first to admit the confluence of them since the election all came that way, and you have pulled it out. I'm going to be looking to see what the open interest in gold is doing. I'm imagining you're getting liquidation all the way down as people just going, uh-oh, overstayed. Silver's in the first good spot. It's at the 100-day average and the Bollinger Band. So this is a support zone. If it doesn't hold, you might go down $1 to the 2,600 level. But I think you're at the first serious level of support, very serious level. Copper, no. Copper and China are one and the same. So the canary in the mine is the copper market. 50% of the world's production normally is consumed by China. And if China's slowing down, they don't need as much copper. So copper, instead of being $4.50 a pound, people talking $5 a pound, if you'll recall, we're back to $4.08 a pound. And that's a problem for the market. So this is based on the copper futures, and that's why you keep coming down in it. BND. Will the market find support at another test of the Bollinger Band? It tested it a bunch of times here. If I'm right, you got to pay attention. You had an outside day down. So you're probably going to try to test that. But if you take out today's highs on Thursday or Friday, it is a sign that you may have exhausted the market to the downside. That doesn't mean it's ready to turn up, but it probably has exhausted its downside. In the dollar, you've got 4 days in a row up. Be careful. Generally, you don't, like you heard me say, you don't go typically beyond 7, and you're at the point where the market wants to probably move to the right-hand side, and you do that by breaking a little, and you got the flip-flop in the euro, so I'm looking for that to give you a little bit of a bounce, okay? If you like these indicators and you want to put them in your trading view, we have the suite for you. And all you have to do is really go to our website, and under Client Resources on the top right, it's right there. Just sign up for it in there and we'll take care of it the rest of the way. It's very, very simple. But you get all these studies that I have. You're also going to have outside days line up on your chart automatically for you. And they're very important, as you know. If you've taken my outside day course, you'll go, whoa. Can you turn off any of these indicators? Of course. Can you modify them? They're meant to be modified, but you really don't modify the slow stochastics. These will be the exact ones that I use, the exact formula in there. You never modify swing line, and you don't modify Bollinger Bands the way that I've got them set up for the suite. Window envelopes you can modify, and you can turn on and off the outside days. Just go to IraEpstein.com, go to the Client Resource Center. You'll see it right in there. Away you go. And there'll be an icon up here. Just give that a click. I'm Ira. I'll catch up with you in the morning.